I'd love to welcome you to this right now, this show, and talk about it on this eve of 2020. What a year. I think a lot of people are really happy it's over. I don't want to be really negative going into it, but man, what a year, not only in our personal lives, but also in the world of our work, the world of corporate culture, the world of social culture, the economy as a whole, and what an incredible ride on the markets today as well. It's just gone noon here. I'm going to quickly recap the market. It's been open for a couple of hours so far as well. Take a look at the movers and the shakers on here. And if you're joining us live right now, we are on Facebook Live. Feel free to type in your comments as we go, ladies and gents. Good to see you on the show as well. So just join us, type in your comments. We are answering your questions in real time. And if you are looking at this as a recording, you may be looking at it right now on the Facebook Live Stockability homepage or the YouTube page as well. So happy viewing to you guys as well. Just a bit, I'm going to be bringing on my esteemed colleague Daniel Bustamante, and we're going to be reflecting on his recent article that he just actually sent out, which if you're a subscriber at stockability.com, you can have access to as well. So if you haven't yet done that, make sure by the end of today, go to stockability.com and sign up for the TakeStock newsletter. This is the live version of that. And we're going to be looking at the year gone and what we feel is to come as well. Your call, my put, looking at that as well. And just kind of keeping it short, because I know many of you, it's 5 o'clock in the UK. It's the evening east of the UK. Some of you are probably getting ready for those New Year's Eve festivities as well. Let's just make sure we are keeping things safe. Fingers crossed, this time next year, we'll be coming into 2022 with a much more buoyant attitude with a lot of this pandemic behind us. I want to be thinking very positive about that. Before we get into down here, let's just talk about it. The last trading day of 2020 on Wall Street, and the stock market is poised to wrap up a tumultuous 2020. And we saw a ton of gains in that, particularly in the tech sector as well. Futures were mixed. Not really surprised to see that in the markets today. A mixed bag across the markets on here. Just as we go right now, going over to the live charts, looking at my screenshot on here. SPY right now down 61 cents. Bids is coming in at 371 and 37 cents on here as well. Russell, man, that thing has had a powerful end to the year. Not been able to hold the 2,000 mark. The ETF, the IWM, trading at 196 and change right now. Just down 40 cents on the day. Not too much of a big change on there as we're looking into that particular market. Let's go take a look at the QQQs right now. QQ's down $1.05 on the day on here. Trading at 311 as we speak on that. And let's just kind of pull up. Can't forget about where it all started. Dow Jones Industrial Average trading at 303. This is again the ETF, so holding the 30,000 point on those indexes as well as we speak on this particular market here. Again, VIX up ever so slightly by 48 cents on here. And really not a massive amount of change. I mean, everything's kind of flat. Where you're seeing it probably the most here is down 38 bucks on the Dow Jones. But again, the important levels are holding 30,000 on the Dow Jones. S&P going in clear of 3,500 right now. The NASDAQ just powering on above the 12,000, knocking on the door of 13,000 points right now, and the VIX remains unchanged. Looking at some of the other markets that we've got as well, because we'd like to get a little bit of a tell in here. Anything really making eBay fight on the day? Microsoft down $1.71. IBM having a fairly decent day right now as well. Apple holding steady, just $1.50 down at 132 right now as well. Facebook down a couple of cents, not really anything too crazy. And Tesla's still pushing higher, up $19 on the day right now at $713 as we speak. Gold up $5 on the day. The battle for 1,900 points on gold. Crude oil just down 23 cents as it's flirting with the $50 mark right now, trading at $48.17. Nothing too crazy. What about Bitcoin, you ask? I know we mention Bitcoin every time. Now we have to honor cryptocurrency. Dan and I'll be having a chat down that as well. Down a whopping $412. That's just a blip. $412 down on the day. Currently trading at 28,400 at the moment right now on Bitcoin. A lot of pundits right now saying it's coming to 100,000, 150 by the end of it. We'll see. Obviously, they hope that because they're buyers of it. Again, we are going to be talking more crypto going into the new year. I think it'd be a shame not to do that. But it's because it's important, guys. But at the end of the day, you know, there are other markets out there too, and we have to get a well-rounded portfolio when we're looking at these particular things on here. Jobless claims came in today below estimates. So number of first-time unemployment benefits filers total 787,000 for the week ending December 26. Economists were expecting it to be 828,000. So slightly good news here. A little bit more of employment coming in towards the end of the year as well. European shares down posted yearly losses of 3.8. So European markets, which actually closed yesterday, closed today, excuse me, and are down now because obviously we have the shorter trading day as well. We saw the Pan-European Stock 600 index close 0.14% lower on New Year's Eve after a shorter trading session, bringing the 2020 losses to 3.8%. not so great in there as well. Yeah, again, those individual stocks, the Teslas, Western Digital, all of those guys doing really well. California has identified its first case of mutant COVID strain found in the UK. Yeah, thanks. You're welcome. All right, good to have that. Nothing to do with me, like I said. And the US has now imposed tariffs on French and German wines and aircraft parts as well. That's really it. It's kind of a mere day. I'm not expecting much to be happening for the rest of today. If I was you, I'd just sit back, enjoy, get ready to chill, enjoy a nice long weekend, Friday, Saturday, Sunday. Monday, January 4th is the official start of the trading year. And I think that's where we're going to probably see a little bit more action on that. To talk about the year as it's been, that's what I would like to do right now, is I'd like to talk about the year as it's been as well. I want to bring on... Oh, there we go. I unmuted myself by the sound of it. There we go.
Yeah.
I'm trying to unmute you and muted myself. There we go. See, we're doing a lot of kind of technical stuff here. Again, I always say I do these little things, Dan, just to prove it is live. Because at the end of the day, otherwise I think it's all pre-recorded. How you been, my friend? What's the weather like out on the West Coast right now?
It's good. I came to the office today like a workaholic that I am, so it's still cold. So we're about 50 degrees. So that's cold.
Oh my God, what I'd give for 50 degrees. 41 right now here on the East Coast as well. I don't know how much longer I can take it. This is a quiet week for you. We talked about this before, didn't we? And you generally kind of tend to take the Christmas period off. Has that been the case for this year, Dan?
Yeah, normally I try to take off December, so pretty much the whole month to basically go back, stop, look at what I did on the year, what I want to do next year. So basically this week, I've really taken it off. It's kind of like my time, like one time out of the year to literally disconnect.
It's nice, right? I mean, I think we all need that as well, don't we? I mean, when these things are happening as well, I think, to me, it's really, really important for us to kind of get that little bit of time. And, going back over the years, I don't know about you, I've looked at December's and generally they are quiet. Generally, there's the odd year where you can say, man, there's that Santa Claus rally. But I find a lot of that is all myth and kind of voodoo a lot of the time. Every year there's going to be a Santa rally, going into the new year. To me, this market's kind of done, and, I would say, again, I expect the action to start next week. What are your thoughts on that, my friend?
Yeah, I think probably so in my experience, and too, I mean, I think it's like the second, third week of January is when I get super excited. I remember last year specifically trading. I was in LA. It was kind of quiet for the first 2 weeks, and I was waiting and waiting. We were just grinding higher. So usually January is kind of slow. But I think with the new president coming in, I think that's going to mix some things up. So
I think what the thing that bothers me, and I was talking to like good friends and stuff, the thing is, everyone's got this attitude. I feel that like, man, you know what, 2021's happening tomorrow and it's all going to change. I don't think it is. I wouldn't be surprised to see Steelers wearing masks this time next year, and I hope that's not the case. But, there's a lot of moving parts still going on, and no one wants to be more optimistic than me. I'm an optimistic person by nature, but I don't expect a ton of change that early. And I think people should go into this year just cautious, bullishly cautious. I'm still going to remain. I can't see suddenly, Biden being sworn in and then bang, the market collapses or anything. I just feel like more of the same, Dan, for me. And it's been an interesting year. There's more of the same as this market explores. Again, I've said this many times on the show, and I'd love your opinion on it. I've not seen anything yet of real magnitude that's going to push this market down, but I'm not seeing anything that's going to just see, another 20% gain in the first quarter of the year either, right?
Yeah, so the NASDAQ was up, 40% this year?
Yeah.
Okay. So for sure that's not happening next year. So I think 2021 has its work cut out against it. So we're definitely not going to see that. I agree with you. I don't see what's going to put the markets lower, but again, let's talk about last year this time. I don't think in January we thought Corona was going to hit, right? I mean, nobody saw that.
Well, no one does know, do they, Dan? That's the thing. I mean, let's face it. Let's go back to 2007, the credit crunch, Bear Stearns, all of that. Then Lehman's. No one saw that coming. I mean, literally, let's face it. Before Lehman Brothers went under, 6 months before Lehman's went under, Forbes valued it as one of the safest and greatest investments you could ever make. Forbes did. And 6 months later, it's gone. So, you've got to look at it from different. I don't think you ever really know. But I think you can tell. I think there's subtle things in the market that can make you be a little bit more cautious. And that's still how I remain. Optimistically cautious at the end of the day. Stop losses are a big part of this too. You just did a great article. I'd love to cut straight to the chase because I know everyone loves it when we get on the charts here, Dan. And again, I want to keep today's show short and sweet because I know everybody's got their celebration to do. I mean, we all have. But looking at this market, you just did a great article. I believe it's just gone out today on the TakeStock newsletter that I know you're a regular writer on as well. I'm going to actually go pull that up, and you did a great piece here, Dan. 2020 year in review, and you broke it down quarter by quarter. I'd love to go through like an interactive version of that. And anyone viewing the show right now, go to stockability.com and then go click on the Take Stock newsletter. Go subscribe to that. You'll get this in the inbox coming every Tuesday or Wednesday, I believe, as well. Lots of other cool things on here as well. Dan's just written a great piece of 2020 a year in review, and you got some great things. It started with Q1 all quiet on the Western Front. Did you go into Q1 of this year just expecting business as normal, or did you go into it? And then again, we didn't know about the pandemic at that time. Well, what was your attitude going into Q1 at the start of this year?
So I remember specifically, because I remember going into the end of the year, the markets, I was like, hey, I think we're going to sell off a little bit. And so I was in LA with a friend, staying with some friends, and I was like, hey, I want to be short the market. I thought the Qs were just too vertical, and I was like, hey, I want to be short. So I started putting positions on for like March expiration, April, and I started shorting different things. But it just kept kind of grinding, and like we'd break down and grind. So I was like, okay, I didn't really think too much of it. And then I think towards the end of that, you obviously had the fires happening in Australia, right? So that was pretty crazy. I was watching all that happen. And then towards the end of that, you kind of had like this inkling of like these videos online from China, right? And I remember sitting with some buddies of mine, and we're like, I don't know if this is fake, right? We're like, is this real? Like, because there's like videos of, like in Wuhan, people like standing up and like falling over. So I see all this, and I'm like, are you seeing this? I talked to some other buddies. Like, yeah, I think we should short Apple and Olipop. I was like, okay, so I did short those names. And I'm like, man, the market's still tracking higher. Like, how come the market's not panicking about this? And I was talking with a good trader friend, we met in Austin too. And we're sitting there every day. We're going on our runs. The market closed, and we're talking about this. We're like, how this market's not pricing this in? And I'm already short, and I'm red on my shorts, right? So it's not a comfortable position to be in, but I'm trying to stay convicted. So we keep kind of moving on, right? And then I remember it was like a Friday, maybe into February, and we start to like sell off, like start to get pretty heavy. And I'm like, all right,
yes.
Like, and so the news headlines start coming in. And it's funny because I was writing that article the other day. I started to remember and play back what happened this year. And so over the weekend, it got worse. I was like, all right, now the media is going to run with this. They're going to take this and they're going to push this forward. And they're going to start saying, this is your scare tactic, whatever you want to call it. And we started selling off more. So I went from like negative red to green. And then I sold and took profit. But here's the kicker. And I've done this before. I'm sure I'll do it again. We sold off so hard, right? On that position, everything I would have had, it would have just been an insanely big start to the year profit wise, but I missed it. So I sold all my short positions, I think on the second or third day. And the reason is I was short all of January and negative. And it just kind of got to me, right? And so we finally ended up selling. And that, yeah, there it is. So that was the start of it there at the top. Like the first 3-4 days in, I was like, when you get really hard selling, you're like, hey, this is it. No idea. Like, I don't think anybody had an idea. It was going to get as bad as it was. And obviously it did. And it continued to just implode. So
it was an unbelievable time, in the market for sure. I got the chart right here. I always love to kind of bring up the charts, while you're speaking, Dan, and just give the viewers, an opportunity to see what we're looking at. When it came, man, it came, and it came quick. I mean, that sell-off was a brutal sell-off. Huge point. I think what then stuck a lot of people, and then got a lot of people kind of then concerned, was this after we bottomed out, and then this massive bounce back that we saw in the market straight afterwards as well. I mean, that was the thing. Wonderful buying opportunity. But again, let's face it, let's look at the start of the year. I mean, we had a pretty, let's just go from where we were. It was just business as normal, right? A pretty steady, gentle ride, pullbacks, and the market moved higher on there as well. And then again, no one knows it's coming. But I remember being in Florida myself at the time, Dan, and I was talking to a colleague, an old buddy I used to trade with, market veteran, Wall Street veteran of years. And he's like, I just don't know. And I think a lot of pros like yourself were saying, I'm already factoring this into my positions. I'm already factoring into my positions that there's going to be problems with this COVID. And we saw the lockdowns. I mean, people were bolting the doors down in China. They were locking people in their apartment blocks. And the market just kept grinding. You remember the very first cases were early December 2019 that they were reporting this, and I remember just saying, yeah, and then it came, didn't it? And it just came out the blue and it hit. And it always seems to be that case in the market itself, which is why, again, I appeal to anybody who's a buy and hold investor to not blindly go into the market just saying, hey, market's going higher, I'll be okay, it will bounce back. Because again, sure, let's just look at this chart down. And again, we talked about this so many times on the show before. That sell-off happened, this recovery happened. But I think what a lot of people don't realize is this sell-off here could have been a ton of great opportunity for somebody as well. Not only to protect, but then to have bought back in on these lows as well, or maybe even take some short positions on the downside as well. I think there's never been a time for investors to learn more about active investing and embracing both moves on the upside and downside, right, Dan? Especially going into a year like 2021.
Yeah, look, so again, let's backtrack for a sec, going back to what happened last year. So even going into this month, look, I'm not like, I guess, talking head, or people like to call market tops, I think it's kind of
They love to.
They do, right? And it's like there's nobody sending you a trophy for it.
I know. It can destroy your account.
Yeah. And I mean, but I never want to call them, and I never want to call bottoms either, because again, I just don't get any satisfaction from it at all. I mean, if I make money, I make money. That's the goal of all this. But going into this month, I said something in our Slack room when we were discussing concepts. I go, I don't want to be a new net long up here. I think it's time to re-risk off again. And so, again, I don't know what the event is going to be. You never know when markets occur. But when you look at risk across the board right now, I'm not saying I won't buy longs, because there are some ones that we'll talk about later in the show that I want to be long. But right now, I mean, the Qs, SPX, or S&P specifically, I think I want to start getting short the next 2 weeks, right? I think I want to start, not just yet. I think it's got a 1 or 2% more move on this thing, a real small move higher. And then I want to start positioning short for end of January to kind of start selling off. And again, this is the same concept I took last January. I looked at the markets, looked at different indicators. I was looking at the VIX, trying to understand things. And that's why I got short. I didn't know that virus is going to, again, hopefully nothing as bad happens ever again, and we don't see a year like 2020. But again, from a risk standpoint and assessing risk across the board, I do want to be cautious, because I do want to get short here for a little bit.
I think the ones I'm particularly cautious on, we'll just go back to it right now. And again, I'm going to just swap this over to a weekly chart so we can take a look at this. I think the weekly perspective, it gives us a nicer perspective of this right now. We were just looking at the QQQs. So let's just go back over to that right now on here. And hopefully everybody viewing can see my charts right now as I'm going through this. Now, here's your QQQs. This does give me concern. I mean, yeah, it's been a massive bounce back. And again, it's great to see. I'm not knocking it, but this rise in the market has been good, but heavily overbought, in my opinion. Everything we do here is for educational, entertainment, instructional purposes only. But Dan and I are not registered brokers. We're not here to give advice. We're here to give opinion. And I'd say to anybody who was really kind of very, very bullish in the market, and I've heard of these strategies, Dan, where people January 1st or first trading day of the year, they just start buying stuff up. The market I wouldn't want to be buying right now is the Qs, heavily overbought. Okay, there's better opportunities. Another one I'd be a little bit more cautious about, Russell. That thing, the RTY, actually, let's just go to the IWM itself. Take a look at the IWM. What's your saying? Too fast, too far, too fast, right, Dan? That's the saying, isn't it? You want to just take a look at that from an elevated perspective of what that market has actually been doing. And let's just kind of just zoom in so you can see that. I mean, look at this market. I mean, if you look at the gains that thing's made on it, I mean, it is practically vertical. When I see markets literally going vertical like that, that scares me. I'm like, I don't want a piece of that, Just to me, that's just waiting to be tumbled over. Too far, too fast. Would you agree on the Russell, maybe, Dan?
Yeah, I mean, what a year that index has had, and all small caps have just crushed it, right? I think that's got what's the high on it? I can't see.
We put highs at, and let's just zoom in on here so we can see on here. Here we go. Let's just look on here. Look at that, 201. You see that there?
Probably
high of 201.18 on that, Dan. 201.18 was your all-time high on that.
I think you got 2 to 5 maybe % more on this on the Russell to go, and I think you got to be cautious. And I think looking at that daily, there's a setup. I mean, I already know because I was looking at it, but you got to be cautious real quickly on this. So that's why I think for sure. Again, I don't know that I'll get long, but I think the start of next week we'll get some long dollar into the markets. But I think end of January, February, we start to see some type of selling in the market. I really think that happens. So.
And again, I see that, and I do not see any major price support on a market like that. And let's just, before I go over to something else, I don't see any major price support until probably around this area here. I would say probably more than likely around this area here, Dan. You know, around this 175. Let me just actually back that up and do it around this kind of whole area here. You know, around this 170, 175 area. I'm not interested again. That thing is just too much. It needs profit taking. I've said this before. I'll say it again. But again, some people are going to want to jump into the market. What's the safer bet? You do want to opt that strategy to pile back into equities. You're going to be better looking at markets like the spiders, right? At least that thing's had a slightly more gentle rise. I mean, still a fantastic year, you know, that the market's had. On the SPY on here, but for me, the safer bet would be the spiders. Not quite as extended, and to me, also looks probably like it needs less of a sell-off. I say there's a lot of buying activity around this 350 mark right now, which could get a good pullback on that. To me, just the safer bet if you want to be a little bit more longer term. I mean, you know, it does show there have been returns historically to be made holding in the broad market. Okay, the S&P is a much more diversified portfolio. That for me would be the safer bet if I was going to be a little bit more bullish on the market. I'm not. Okay, I've got no directional bias right now. I'm both a bull and a bear. And for anybody who's never heard those terms, I'm expecting it to go up and go down and be more of a ranging market. You know, maybe new to the show right now. You've never heard from Dan and myself. You've never been on the show before. We're talking about terms of bullish and bearish. Right now, Dan and I would say, wouldn't you agree, Dan? We don't really have a directional bias right now. We're open to anything that we see.
Yeah. You have to be as a trader. I mean, there's not...
And an active investor as well, right?
You have to be open to just up, down, sideways. You have to put together scenarios where if something happens, you're prepared to do it. So, you know, for me, and we'll talk about it as we progress here, but I've already put together a shopping list for the market for 2021 and into Q4 next year of things I want to own if we get a pullback. So I already kind of put together that plan. And again, it doesn't mean I'm going to execute on that plan. It just kind of means, okay, I have preliminary ideas of what I want to put in the book and put on for trades. But again, that can all adjust depending on what happens in the market.
Absolutely. Absolutely. I'll add one more thing on this, you know, the old faithful, as I call it, the Dow Jones, the diamonds, as we can see, you know, the ETF on here. Again, we like to look at the ETFs on here, guys, when we're doing this. And you can see there, the Dow Jones Industrial Average, the DIA, is the index here for the ETF. Tells me an interesting story. Look at the lackluster move that we've actually seen in this. I mean, barely kind of like done anything, I would say, over this last period of time here, Dan. I mean, look. You know, again, highs, where are our highs on this one? 305 and 70.7 on that. You know, the battle for 300. But again, 30,000 is a big number. We've not really rocketed through it. That to me is a tell. You've got some of the big staples in there that are struggling. These markets seem to get in line. I'm seeing indexes pulling in different directions. And to me, when I see indexes performing at such different degrees with such massive deviations, that kind of tells me everything I need. That tells me, hey, you know what? This market, again, is not 100% confident in itself. And again, you know, if you do want to be that buyer, I think that needs a less of a pullback. I still say S&P is going to be a safer bet on here right now, keeping it really, really cautious in this as we go on there. Not a lot more to say about those. Let's go over and now talk about, let's go to the next section of your article on here that I'd love to talk about then. So we opened the year up. We had that huge sell-off that we had. And then obviously, market plowed on through, just kept pushing for the rest of the year. You described Q2 as the virus is here and panic ensued as well. I think we kind of talked about that. What advice would you give? And I see it again, Dan. I got to say this right now. I see there's going to be another fear phase. I feel like something's going to happen. Oh, we haven't got enough supply of the vaccine, right? That's going to be one. Or I'm hearing about this mutant strain now coming on. There's another panic. What can we say to people when there's another panic? What's the best way to play that? Level heads prevail. That's always been my way. When they're crying, you're buying. When they're yelling, you're selling. What are your thoughts on the next? Because there will be no doubt another form of panic.
Yeah, there's no question. I mean, look, it happened last year, and there was even a point on the futures. I remember sitting. I'm like, there's no way this. And I remember taking a break and leaving because there's, at 8:00 my time, which is 10, 11 yours. The markets don't really move as much. But I took a break from the screens to leave. And I was like, I just got to get away because this is too much. I think we see that again. But I think the advice is to sit back and look at the playbook that worked this year. So you kind of have all right, so Peloton did really well because nobody could get out. You saw obviously Zoom, which everybody who had a Robinhood account bought because it was just the easiest trade, I think. Picked up that. Retailers did well. You had Netflix doing really, really well. Disney did extraordinarily well. So I think you take that same playbook.
They were the obvious ones, right, as well.
Yeah, yeah. I mean, look, hindsight obvious, right? I mean, I missed a lot of them myself. But I think as those pull back, you put those in play again. So that's my insight to it. The second thing is look, going into this year, if funds start liquidating because there's new, and it's going to take a while for tax changes to occur, right? It's not instant overnight. But if there's talk about regulatory changes, whether it's in the real estate space or carried interest, and that is a big deal for this administration, I think you start seeing liquidation in funds that are going to cause an issue regardless of the virus. So that's something I'd pay attention to. So the advice would be just to kind of look at the playbook this year and try to replicate that a little bit. So
absolutely. Again, I feel almost there's this potential for it to be a mirror of what's happened in 2020 happening again in 2021. I mean, and one of the things, it's interesting to me is, one thing that we've not seen. I want to go back over to the charts real quick and talk about this. And before we go on to talk about Q3 and Q4 of last year, and then I'll move ahead to wrap it up with that. Let's go back over to the charts for just a second here. What I'd like to do is go and let's take a look at some really long-term charts here. So what I'm going to do, I'm going to switch this out from a weekly view. I'm trying to get my head around using these different charts as well, Danny, because I'm using a new charting package on here. I'm getting there. I think I'm doing all right. I'm manipulating as best as I can. Let's go take a look. I mean, I've got the Dow over here. I'm probably going to need the index on here, actually, Dan. So let's just go over to my watch and let's go over to the main indexes and let's go look at the Dow Jones Industrial Average here. Now, I got this linked over, so if I go to the charts, that should have loaded. And now, look, I've got a long-term view here. I mean, I'm going way back in time, all right, here. I mean, we're going all the way back here. I don't need this much, but let's just zoom in a little bit and look at this. This is a monthly chart. What I find, interesting is, look, you've got a period here. Let's just take a look at this period right here, Dan, which I'd love to see. Right here. And this is a period from December 98 into 99, this whole year, into 2000, into 2001. You had about 2.5 years of sideways price action, in that market. So 2.5 years, even longer if you zoom it out a little bit further. I mean, look at that. Let's just zoom back in and see. From around 1999 to what do we got here? 2005 even. Look at the chop in that market. It goes out lower. This is something everybody overlooks. They're like, well, we're going to be in a bull market. We're going to be in a bear market. What if we're in this? I mean, this is a possibility, right? This is a real possibility. And this is the kind of environment, and history repeats itself. You had a 4 to 5 year period here on the Dow Jones between late 99 and late 2004 where this market chopped. How does a buy and hold investor make money in conditions like that, Dan?
Yeah, you're not. I remember. So look, I was too young to be trading then, but I remember in 2016 or 17, I was traveling out of the country, and for 2 months straight, I literally had a short position on legit, like a 5 lot short. I don't think I checked it for a month because the market moved like a total of 20 points. It did nothing. So as a buy and hold investor, you can't catch that. But I think there's still going to be some plays in that space. So if that happens, I think you see a return of more activist investing, hopefully more spinoffs. You have to switch to shorter term day trading. I think 2021, I mean, I'm glad you brought this up, is not going to be the same as 2020. 2020's moves were ridiculous, right? The price action on Zoom, on Netflix, on Disney, on Tesla especially, on Apple. I mean, look, I love to see it, but I don't think we're going to get that again this year. And if you do get that sideways range, you've got to adjust how it works because, look, you saw it happen with, and I talk about it in my article in Q3 with, who's it? Look at the gentleman, the NASDAQ whale. What did they call him? SoftBank. Okay. So SoftBank was buying billions of dollars of way out of the money, 20, 30 delta, 40 delta call options on tech names that caused the market to rally like artificially, right? So when you see a company like that, whose business model is not to be out of the money call option traders doing that, something's weird in the market, right? So I don't think you're going to see that same type of moves this year. Yeah, and I do think you see sideways action. And that's a good point because, I thought for a different reason, but you bringing up the sideways action makes me look at a different perspective. I think you're going to hit the nail on the head with that this year.
And I think that the thing that people forget is, you can have an outlook as a trader or investor. You need an outlook, but you also need to be humble enough to change that outlook when the market gives you the signal. And that's the thing. And I've always turned around and said the best time I've ever done in the market is when I know nothing. I go into it saying I have no expectation. I've had no expectations of this year. I got no expectations of anything really. I just have a go and I manage my risk and off we go. And there's plan and there's systematic approach behind it all. But that does frustrate me when I see this. People always talk about the bulls, the bears. Look at these markets here. There's been times when this market has literally done nothing. And, we're due that. And that's not long ago. I mean, this is 20 years ago. 20 years ago, this happened. I think we need to go into it. So then, you talked about Q3, with SoftBank. Q4, to me, let's just take a look at the Q4 just gone back. And let's just kind of go up here and clean up my charts again. I'm going to go back. Again, I'm going to go to the QQQs because that has been the performer, Dan, whatever way we want to look at it. It has been the performer. And I think getting a good eye, let's go onto a daily chart of the QQQs because that has been the one. And again, to me, I look at the last quarter and let's just zoom in so we can kind of see this and manipulate it a little bit. Let's just move my charts around so everybody at home can see it. We've had a decent push. I mean, it's a decent push. But to me, it just screams of, when I look at it like this, all right, there's your final push. And what's the tell for me is, December has just been nondescript. I don't know. If the market was a living, breathing entity, to me, it's just saying, I'm done. I'm tired. I need a little bit of a break. I'm unsure of what's coming around the corner. Give me some news. Give me some real freaking news because you're not giving me anything right now, right? There's not. Yeah. It does. What do you go by? Again, right now, I just go by price action, and I've always been that as well. So, while we talk about that, is the idea, would you recommend to, and this is one thing I've been looking at, is rather than looking at the indexes, and I know indexes are a safe investment and great for short-term opportunity. For me, my trade plan, I'm happy to share this next year, is going to saying, hey, I'm going to use those indexes for shorter term to medium term opportunity, right? Because you can get good enough moves over a week or so, playing them that way. And then I'm going to go on the hunt for individual equities to try and get that extra boost, because there are stocks that are way outperforming the market with higher betas. We've got commodities, we've got gold, we've got oil, we've got individual currencies and so on. For me, Dan, is going to look at this and say, hey, let's just stick to using maybe the QQQs and the Russell for short-term opportunities because they give us enough movement and that saves me going on hunt, and then look for those breakout opportunities. Because the question I've got for you is, do you feel the breakout opportunities are still there on individual stocks?
Yeah, look, so I think you have a few stocks that have been suppressed because obviously of lack of travel, the stay-at-home orders. So I think there are a few. I have a list that I've been after that are suppressed. I don't think you're going to see the same explosion in tech that you saw this year.
Yeah,
there's an extraordinary year for. You're crazy, right? In a lot of even that.
Show its bullets. To me, the tech sector's show its bullets. Nothing keeps going up forever. Just go look at history. To carry on going higher, this market needs a pullback to then go higher. So at least remember that, right? Anyone who's watching this, remember that.
Yeah, you definitely need a pullback on this thing. So, but I do think there's individual equities that I'm looking for. So it's not. And again, I'm going to stay away from the airline space because I got a lot of emails about that. Hey, should I get long airlines? And again, I don't really dole out information because I just try not to do that anymore for friends because if I'm wrong, you get emails from them.
Oh, I know, right.
Right. So I want to stay away from airlines. I just think that they're always trouble anyway. But there's names, and we're going to talk about, I guess, now is like, LYFT. Like I want to be long LYFT all of 2021 and 2022. Right? I want to own that stock. And that's not something that I normally do. There's a few other names.
Let's talk about that then. Let's jump straight to it then. While we're on it, because if we can say, all right, 2020 is done. We want to focus more on the individual things and focus on the equities more for the day-to-day stuff. Because I just want movement, right?
Right.
You bring LYFT. That brings us to our feature, right? Your call, my put, right? So again, I guess you're taking the call on here. I always get dealt the put card, mate.
Yeah,
before we look at the charts, I always seem to get the put card. I don't know what it is, but I guess it's just the way it works for me. You mentioned LYFT. Okay, well then, all right, so let me play the devil's advocate a little bit. And okay, tell me, Dan, what about LYFT? We've got Uber. Why LYFT? What's kind of whetting your appetite for LYFT as opposed to saying, well, I'm going to dump my money into an Uber? Tell us a little bit about that thesis, please.
So LYFT technically has been suppressed, right, on the price chart. So number one, I want to be long that just because of the price chart. Now, Uber has been pretty much vertical. You really haven't got a good entry price point technically. but LYFT has had that pullback. Second, there was a massive $178 million order placed like 3 weeks ago on 2-year out leap options on that stock, right? So literally one sweep, there's this $178 million order. Okay, so when I see stuff like that, I'm not going to be like, oh, I'm going to jump on this. This is how I trade. But looking at that, looking at the price chart, and then understanding, I remember during the height of the virus, it took like 30 minutes to get like an Uber. And I know it's first world problem, so I don't want that to come off as like, oh, like it took you 30, right? But it took forever, right? So nobody was working. So you have California shut down, New York's in trouble. A lot of these states are shutting down. You have that gig economy basically shut down right now, and people aren't working. Okay. So number two, a lot of these people, and it really bothers me, and I don't want to get on a rant, that have been shut down because of government items, so they're small businesses. They don't have that type of income. People that have lost jobs from restaurant business, service business, don't have those jobs. So if we open back up, right, the easiest thing to do is you have a car, you have an asset, you have to turn that asset into dollars. So people should start driving more. And I think you might get an influx into LYFT and start seeing more people, again, from working in that space. So number two, once we open back up, people will start traveling more. Okay. So you have all these different scenarios, and the stock is suppressed. I think over 2021 into 2022, you get like a value realization in that stock. I don't think it's going to be instant, which is why I'm probably going in a leap trade on this. But that's, an individual stock that I'm looking at for next year. So
I guess let's pull up some charts and take a look at it as well while we're here. I like to bring it up so we can actually see it together. And here we are. Here's the charts in front of us right now. A decent push literally over the last couple of months as well. To me, yeah, I mean, it looks like it's showing some strength. There's definitely, if I go over to the weekly chart on here on the right-hand side and zoom in just a little bit so everybody can see it, we've actually kind of now steadily been holding above $40. For me, a real benchmark across this $40 mark area here. I think while prices are holding that, Dan, that's got some nice upside. In comparison, it is that little bit cheaper, I would say, to Uber as well. I got to say to you, over the times just before all this pandemic, I was definitely more of a Lyft user than Uber. I have to say, to give the other guys a chance. I think monopolization is not a good thing. I think we need to kind of have healthy competition in any kind of market as well. On your subject as well, going from a pure and again, this is speculation. Who really knows? But I think if the world does start to open up, there's a real desire for people to get out there. I mean, people are getting sick and tired. They want to get out their homes. They want to start embracing. I think there's going to be a lot of drunk people out there going to the bars and needing to get their lifts and Ubers home. I mean, let's just put it in that way as well. But to me, with it being the future, ride sharing is here to stay. It's not going anywhere. I look at a market like that, Dan, and I got to say to myself, it's a pretty decent price. I mean, I'd love to get it at 40. Would I take it around now? Yeah, maybe if I was being a little bit more, $45. I think, if I look at these lower charts on here, there's some nice price action around this $45 mark as well. But I think for the longer term, and when you say leaps, you're talking about long-term options plays, aren't you, Dan?
Yeah, 12 months out, 24 months out. So literally, I mean, like 1 or 2 years out on this, right? And so, and for me, this is a big adjustment. So you talked about your trade plans. I'll still use my short-term trading like you are with the indices. But because we have a lot of things with the company, other investments going on, I want to be in a few names that I don't have to watch every month. And this is something we talk about in Wealth Abilities too, is like leap options or deep in the money options as a way to replicate shares. And I found a few names, I identified a few names. This is one of them. So I do think over 2021, this thing has a real shot at pressing. And if it doesn't move the first 2 months, look, I have plenty of time on the options. And again, I haven't put this trade on yet for full disclosure. I'm waiting for the new year. But I think it has plenty of time to run on this. So.
Price has memory is a saying I was brought up on by my original mentors, Dan. Price has memory. $90. Look at that thing when it was up there and it just fell off the edge of a cliff basically since its IPO. This reeks of a classic case. Like I say to people right now, there's a reason why they don't let you short sell a stock in the first 30 days of its IPO, because the people who took it public have got to make their money back, right? Literally, they took that market open up around $90. Things sold off ever since. They coined whoever took them public, and I can't remember off the top of my head who it was who took them public. They made bank on there. Great time, I think, to get into it. Maybe echoes of Facebook that I'm seeing here, Dan. Open up, if I believe, 2012, around $45 a share. Maybe that's 8 years ago, I think it was now. Again, please correct me if I'm wrong here, guys. I'll have to go back and look. But echoes the same kind of thing. This thing was at $90 a share, and it's been there. Could it go there again? I don't see why not. I think I agree with you on that. It has a long-term plan, and it's going to niggle me now, so I'm gonna have to go over and take a look at the Facebook chart and see. 2012, there you go. There's where I was. Where do we open up? Floated price $40.20. So just off of it. All right, I'm a little bit of a nerd, I must admit, but you saw a very similar thing, Dan, in the price action on Facebook all that time ago. Let's just zoom back into the chart and see exactly what happened here, right? And you can see we opened at $42. I think we floated at $42. Massive sell-off. Massive sell-off initially, as we saw, to push the price all the way down to below $20. Those lows that were created, let's just see what those lows were on here that were created. $17.55, guys. $17.55 were your lows. And today, where are we trading right now? Where are we trading right now, guys? $270 a share in 8 years. Not a bad return. I don't know. I'm feeling a kind of a little bit of a similarity, with a LYFT and an Uber that I saw with Facebook as well, Dan. And you see that a lot with these IPOs, don't you? They get smashed in that first, sometimes 6 months, a year, and then the opportunity to truly come in isn't. I like to see the market establish it. What are your thoughts of jumping on an IPO, Dan? I'd like to ask you that question before we move on towards the end of the show.
I don't think I've ever traded an IPO once, and I could be wrong. I don't think I've ever once done it. I haven't. It's never been like, if I was pre-IPO, of course, I've never understood the strategy. It's too risky for me. I don't know. Have you traded an IPO? I mean, I never did.
I've always said to myself, hey, I'd rather wait for the market to establish itself, let the major banks, the institutions, the big players come in, and then I'll give it my opinion on it as well. I like that, I'm adding LYFT to mine. I got to say, Dan, I appreciate that. I like what you're seeing with it. I like what I'm saying with it. It's a great one. So
massive order too, like that $178 million call trade was. I mean, that's huge, man. It's
all the stuff under. It's all the stuff under the scenes. My put, and then I got one more feature before we wrap this thing up. Bust the Bitcoin, because you're on the show, so I got to do it. Okay, we got to talk a little bit about crypto just before we finish as well. It's going to be a regular thing. We like to have our opinion on it. We like to look at it. We are a show about investing, active trading, active investing. We have to look at everything. But we've also got to look at things that are maybe a little bit overdone on here. My pick, your call was LYFT. My put today, I got to set on here. Let me go take a look on this. ZM is your ticker. You know what it is, ZM, guys. It's Zoom. I'm seeing a steady downtrend in this market.
Yeah.
And I'm a price action analyst. That's what I do. I'm always studying price action. I'm looking at it. I mean, this to me, the first tell for me, looking at these monthly charts that you see right here, big wide open spaces here cleared up. I do believe that $300 is a major test on here. Short term, I would be shocked to not see this thing test $300. That is a round number. There's a psychological relevance to it. I would honestly, I would be absolutely shocked to not see a test of $300 on Zoom. That means we've got about $40+ of downside as we speak right now. That's my short-term outlook. But what is a little bit concerning for me, if I were an investor in a market like Zoom, and again, it was the Robinhood trade. And if you are a Robinhood user right now, don't take that in a bad way. But what we say is this: I don't know, everyone's cut from the same cloth, but there was a lot of people, jumped on that bandwagon. They get their first investing experience. They're like, well, everyone's going to be using Zoom, I'll buy it. That to me was a purely retail funded rally I saw in this market, right, Dan? I mean, huge retail rally. We saw it. And then look, the wind has come out of its sails. And what concerns me about Zoom, and there'll be people looking at this right now thinking I'm an idiot saying it. And I don't care, because if I'm wrong, it's going to cost me a little bit of money, not a lot. What concerns me is this, and I'm drawing on the chart. We are seeing, if you can't see that now, we are beginning to see some real strong downward trend coming in. And I honestly, the number for me is 250. That's the number for me. That's the real go-to goal.
Now you're talking my language.
What's that?
Now you're talking my language. That's a big short. I like those ones.
I love it. I mean, that's the one. I think there's about $100 of downside, $40. I would be shocked, Dan, if we don't get a bounce around this $300 mark, a little bit of a pullback, and then hit some major resistance around 400 and then down again. Let's just clean it up for everybody here. This $300 mark, this is what I'd be seeing on here. I'd like to set a small bounce at 300, major test at 400, bang, taking it down to the 250. And then I'd have to reassess because 250 is a big thing. I think the need for Zoom is good. But do you know what I want to see, Dan? I mean, look, I will say this, if 250 doesn't hold, if 250 doesn't hold, hello 150, right? But let's just bite off one bit at a time. Yeah, what I want to see, Dan, and we're using Zoom right now, so God bless you, Zoom, you're making technology good for us and so on. But I want to see alternatives. I want to see Zoom up their game. I want to see Zoom offer high-def broadcasting. They could get more in their streaming. There's a lot of things that they could do as a company. And what I'm not seeing, I'm seeing, I would say, throwaway innovation in Zoom right now, about to do all these effects. But what I'm not seeing is real innovation now, of, hey, let's make our streaming quality better. Let's, let's make our storage. And to me, as an investor, I want to invest in Zoom, but I'm not seeing the innovation. Zoom, if you're listening right now, give me some innovation. Make me want to invest in you, because right now I see downside in that stock. I'd love your thoughts on that before we come towards the end of the show, Dan.
Yeah, I agree with you. I think, look, this trade was funded by retail side, Robinhood side, where everybody bought into this. It was an easy trade because of literally everybody was using Zoom for meeting with people. I think once you see this rally in and people start seeing their P&L start to dwindle, I think it's a mass exodus. And the price chart's telling you that anyway. Whether we're right or wrong on the other part we just discussed, who knows? But the price chart says lower. So, yeah.
The panic always causes the push. I always see the panic, you see the push to the downside on that as well. Super good. I like that one. I like that. I enjoyed that discussion on here. Dan, look, we wouldn't be able to kind of finish the show up with a quick little talk about crypto as well. Again, we both have our mixed feelings on it. Every time you're on the show now, we have our final feature, Buster Bitcoin, as we call it. You've made some money out of it. You've done well out of it, but you're still unreserved on it. Let's take a look at where Bitcoin is as we stand today. Today's quotes, let me just go to my default list on here. The Bitcoin Liquid Index down now in the time that we've been talking, it was down $400. Now it's down $184. Oh my gosh, anyone, please don't trade it. I mean, it's getting crazy. We're at 28,645 right now on the market. I believe that's shut down now, that Bitcoin Liquid Index. Are we going to see higher prices? I mean, what are your thoughts on it, Dan? I know you talked about alternative investments. I'm watching BITW. I've got to say that. BITW is one of the ones that I'm watching. It's the Bitcoin index. It's the Bitcoin top 10. It's not the Bitcoin index, trying to say. It's the cryptocurrency top 10 index. A little bit more diversified. That thing opened up at $200, $199.90. Today trading at 57. It's got hammered ever since it opened, but I think there's maybe an investment. Great. On the flip side of that, I mean, Bitcoin has been just pushing. Let's pull up the chart on here for you so you can see it. If I can bring it up as well. What are your opinions on it? What's your crypto outlook for the next month or so?
All right. So look, I had kind of a rethought on this. So the crypto industry brought in so many people that were never traders, who ever even considered trading. I think there's so many people involved in this now, and there's so much optimism or skepticism on it. Either way, there's so many market participants in these products, whatever we're going to call them. I think you're going to get a pullback, but I think this thing's going to hit 50,000. I just don't see. It's just kind of like the tulip mania concept, for better or for worse. I don't agree with it. I don't disagree with it, but I understand markets and market participation, or participants anyway. So as they get into this, I think that you have more people trading it. I think it's just going to run higher. I just don't think that this thing's pulling back anytime soon. I'm not mad. I was talking to a friend. He's like, "Are you mad you sold all of it?" I was like, "Not really. I mean, I wasn't. I mean, if it goes higher, it's awesome. It was never a market that I believed in super well, right? There's other things to look at, but I think it's going to go higher. Crazy run I've seen. It'd be cool if there's a way to trade it, not through that. And I've looked, and I want to trade it through an equity that has a strong correlation.
Agreed.
I can't find one, so.
Agreed. Yeah. The best thing I found is the BITW, which gives you a little bit. It's your S&P 500. It's very diversified. It's the top 10 cryptos. You've got Ethereum and some of the other ones in there as well. Again, I would just say this, if you're a long-term holder of it, good luck to you. Throw some money at it, write that money off. I mean, I'm invested in it. I have some in it. I'm leaving it long-term to see, but I am treating it purely as a punt. And I think what just gets me is when there's people out there, touting about trading this seriously every day. And I'm sorry, you can't. Not with that kind of volatility.
Yeah, I mean,
get
look,
destroyed. If you want to learn to actively trade and invest, go do that. And they go, oh, well, Paul Tudor Jones is doing it. I can tell you right now, no one's got more respect in the world for Paul Tudor Jones but me. But I'd be shocked if Paul Tudor Jones, right now, one of the most prolific and successful investors of all time, is day trading cryptocurrency.
Yeah,
that man's got more money than everybody in the world put together, except for Jeff Bezos, right? The guy's got billions at his disposal. He's probably just put a few hundred million in or a few billion and says, if I lose it, I lose it. And if I don't, wow. He ain't day. His fund is not actively trading crypto, right, Dan?
Yeah, look, I'd bet some serious coin on that. I doubt there might be algorithmic trading on it, but nobody's day trading it. So the cool thing is this Bitcoin and cryptocurrency brought in a generation of people who never invest and saw volatility, right? This same volatility you see in cryptocurrencies, whether it's, Bitcoin, XRP, Ethereum, whatever it is, that stuff has been going on in the DAX, right? I traded the DAX futures in 2011 heavily. It's been going on in equity options for years. It goes on literally every day in crude oil.
It really does.
So there's better, if you want to day trade, if you want that volatility, it's, in my opinion, more easily accessible. There's better products to do it. So like, just like you did and like what PTJ did, it's just buy and hold and you don't look at it kind of thing.
I'll just leave you with this chart on it. We're going to talk crypto every week. We're including it in it. It's interesting. I'll go on the record and saying it. This thing needs to get about 30,000 points, and even if it gets about 30,000 points, I'm not expecting it's just going to go. I think 50's got it written all day long. There's a trend there. Who am I to balk the trend? But I'm telling you right now, there's some serious price gaps on this market. There are serious imbalances on this market that need to be corrected. And one thing I know, price is price. Markets are markets. That thing needs to correct itself. It needs pullbacks, okay? It needs a healthy pullback to about 24,000 on here. And even lower, if you ask me. There's some major imbalances down at 17,000. But the first test for this is 24,000. Looking to get into a little bit of this. Treat it as an investment. We'll carry on our Buster Bitcoin watch on here every time Dan's on the show. Dan, I appreciate it. We're not writing it off, but also remember this. You want to be an active trader, that isn't the place to do it. That is an investment. Bitcoin, crypto is an investment. And the people who are treating it like an investment, great. It's like investing in a house. You don't flip houses, buy it one day, sell it the next. You can do that, but listen, the market's not there to do it. The conditions have to be there to do it as well. Dan, I appreciate you sharing that on the show with us. That's super useful. Again, I think we'll be talking about it more. We'll keep it in. Like, what kind of analyst would we be? What kind of host would we be if we didn't bring in all the markets and look at all of the markets, right? That's what we have to do as well. Dan, I guess I should let you go get some rest right now. Recharge your batteries for January 4th. Any last final words to our viewers on the show right now before we start hitting the ground running next year?
Just Happy New Year to everybody. Thanks for watching and supporting us this year. We'll be back next year. We got some cool things coming. So stay safe tonight. Get some rest, and we'll see you guys in 2021.
Guys, thank you so much, Dan. I'll be talking to you real soon as well. Thank you so much, my friend. Enjoy the rest of your day, and Happy New Year to you, sir. That was Daniel Bustamante, everybody, and Dan Bustamante on here, one of my regulars on the show, one of my regular guests, and my co-founder as well on here. Great to have him on the show. I always enjoy it. We always say, we're going to do about half an hour or something like that of the show. And then guess what? Before we do anything, it's done. And then off we go. Guys, a lot to take in there. A lot of different things going on the show. Before we wrap the show up, I'd love to say to everybody here right now, thank you so much for your, viewership on here. I want to give a few shout outs right now as well. Sean Kroger just joined us as well. Louise Fox, Clifford Rose on here. Bob Perlikin, Ken's wishing Happy New Year to us all. Tina Rapp, Rosie Mason, Phil Jackson on here. Lots of kind things. Ruth saying hi on here. All of these guys on here. Eric Blutman, Jody Katarakis, a lot of people on here. The show is beginning to get some traction, and we are going to keep pushing it and pushing it and pushing it. More guests, more commentary, more entertainment, more insights, more education. That's what TakeStock Live is all about as well. If you've not yet done so, make it your New Year's resolution to go to stockability.com and subscribe to our newsletter. We have a host of market experts who've been in the industry a long time, over 50 years of experience, from Dan Bustamante, Ryan Watkins, myself as well, all kind of posting some great opportunities and ideas on there. Also, we're going to be having regular guests on the show as we move forward in the new year as well. So expect more guests on here, more high caliber levels of traders and analysts and instructors who've had years of experience on there, offering their objective kind of opinion on the market, tips and tricks for an active trader and investor, or somebody who's just new to it and says, hey, I want to find out a little bit more. You want to find out more? This is a great place to start as well. Check out stockability.com. There's a lot of other resources on there which can get you going to as well as you move forward. It's been a great year. In many ways, it's been a tough year in many ways too. Whatever year has been, I would say, reflect on it, take this time to have that quiet time and just, be grateful for anything basically that, that's happened to you, good or bad. We move on. It's all about pressing forward. And, one of the things I like to do is not just to make this a show about just the markets, but, the markets are life. Life is in the markets. This is what we do. And it's all about your attitude to everything as well. So no matter what kind of year you had, going to this next year, take these last few hours that we've got of this year, and Happy New Year to some of you already who you may be looking at the show right now. Take stock of everything that's happened to you in this year, and take it, own it, move into the next year, and go into it with vigor and confidence and happiness and so on as well. I know I'm going to be, but I'm not going to be the only one waving the flag alone in this as we go into 2021. Is there a lot of more challenges ahead for us? Absolutely. But you know what? You can overcome those challenges. I can overcome those challenges. We can all overcome those challenges, just taking one day at a time as well. And, one piece of advice I'm going to say to you is this: watch this show. You'll just get it the way we see it. We're not into reading about the negative stuff. Yeah, well, accept the negative stuff, but we want to stay positive on the positive stuff as well. And you guys joining us on the show as well with your comments and so on has been so positive. It's really helped us plow on as well. And we want to take this up to our next level as well. So thank you sincerely for joining us and looking at all these shows as well. We will be back next Thursday at 12 noon here on Facebook Live. And if you are watching the recording of this, maybe you got it on the Facebook Live recording on the Stockability page on Facebook, or you can go to the Stockability YouTube channel. And stay tuned. Go subscribe to the Stockability YouTube channel. We have more coming on that. Snippets of our traders, our master instructors at work, showing you the trade setups that they've been doing, feedback from our students. I am doing a live Q&A open house show every week coming in January as well on YouTube too. So a lot of cool things happening. We are going to be on there. We're going to be dominant on it. Get interactive with the show, looking at live charts, looking at live setups, trading together. There's going to be a whole lot of really cool stuff going on as well. Can't do it on my own. Need you guys as well. One thing you're always going to get here is no BS. You're always going to get a real unapologetic, honest approach and opinion to the markets as well. We're here to help. You've helped us by being a viewer and also supporting the show from the start. So thank you sincerely. Guys, I'm Sam Evans. This has been Take Stock Live. And again, powered by stockability.com. It's been 2020. That's all I have to say. Long live 2021. A sincerely happy new year to you and yours. See you next year, guys. Stay safe out there. Thank you so much.